Other top stories now, and data released in China today has shown for the first time that there are now more people living in urban areas than in the countryside. It's evidence of the shift that's been taking place in recent years, with more Chinese moving to the cities in search of work. Many Chinese megacities have been created as a result. Here's Martin Patience in Beijing.
More people now live in China's cities and towns than live in its countryside. It's all part of the largest wave of migration in history. Now, 30 years ago, China undertook economic reforms which propelled millions into the cities in search of work and opportunities. Many of them found jobs in factories, which formed the backbone of China's remarkable economic growth. China, of course, is now the world's second largest economy. Now, last year, more than 20 million people moved into its cities, and that trend of rapid urbanization is set to continue. According to analysts, by 2030, almost three-quarters of China's population will live in its cities.
Martin Patience in Beijing. Well, other data released in China is being very closely looked at today because of what it tells us about economic growth. That rose just over 9% last year compared to the 2010 figure of 10.4%. It is still higher than the 8% growth target that the Chinese government had set for last year. Both global instability and inflation tackling measures like interest rate rises have played a role in the slowdown. Let's go live now to Beijing and join the chairman of the equity firm How Capital, Charles Liu. Charles Liu, tell us how these figures look from the Chinese perspective. In the end, 9.2% growth compared to the target of 8%.
With 9.2% for all of last year also indicated a downward trend because the last quarter was actually 8.9%. It's expected for the rest of this year, 2012, the trend will continue to move downwards. Compared to the target of 8%, I think what happened was the stimulus program instituted in the 2008 financial crisis, some would say got out of hand, and the liquidity propelled much faster growth and higher inflation than the government wanted to see.
So does that mean
the
that
measures?
Yes. No. Sorry to interrupt. But does that mean that overall it would have been better, healthier, perhaps for the Chinese economy if the government had managed to do better and get closer to the 8% target? It's the opposite of what many other economies are struggling to do, of course.
Oh, absolutely. And they would like to bring it down to 8%. I think there's a chance that it goes down to 8% this year. The tight fiscal and the tight financial measures are continuing in place, and it's expected to be continued at least for the next 2 quarters.
And do you think it is right to continue on that same theme? You know, given the issues in China's export markets, particularly in the Eurozone, is it the right time to try and deliberately act to keep an economy slowing down?
The general feeling in China is that it is the right thing. There are 2 aspects here. One is the overheating from real estate speculation was a major contributor to the costs of to the accelerated growth in the last 2 years, and it is important to wipe off some of those bubbles. But even more importantly, I don't think anyone can tell what will happen in Europe in the next 6 months or 9 months. It's important to keep your powder dry in case there's another off-the-cliff event like Lehman Brothers in Europe occurring this time in the next 6 months.
But is there evidence that inflation is coming down or the property bubbles are being controlled? Are these measures having the desired effect?
Absolutely. Inflation is on a clear downtrend and is expected to be well below 4% this year. It's been going up to 6%, but now is down to about 4.3, and this year it will continue. Most of the inflation came from food prices, and as you know, for many food products like pork, which is important in China, it's a cyclical product. When prices reach a certain level, a lot more farmers raise pigs and brings a downward trend on the pricing, and that has already occurred.
Okay, Charles Liu of the private equity firm How Capital, thanks very much for joining us this evening from Beijing. Well,